Hi everyone, this is Amit here and I'll be walking you through today's price action analysis of Bank Nifty futures using 1 minute candlestick chart. This dark blue line is yesterday's high where price went. That was the highest point. Okay, so you can clearly see that market opened, gapped up, but immediately sellers came into picture and they started pushing the prices down. The price poked below yesterday's high but couldn't manage to get past it. I mean, it closed at a point which is above yesterday's high. So possibly this was a profit booking candle wherein it gapped up those who had bought yesterday, they booked, and then there are some bulls that came into picture and are still holding the price around this area. This did not close below yesterday's high. Now this price action analysis is all about reading subtle clues. Okay, all the theory, all the patterns are given in textbooks already or through different courses. What is important is basically you being able to understand subtle clues, important points in terms of where it closes, what is the area around which it closes, where we stand in the overall context, right? And I'm giving you all those pointers in the videos that I'm capturing and hope they're helping you. Coming back to this day, so you can see that whenever I see such a gap opening and I see a bar with shaved top or bottom depending upon the context, I'm ready to take the bar 1 trade, which is basically get in at the close of bar 1 depending upon where it goes, right? Now here you can see that bar 1 is a failure breakout, right? So I would like to get short at the close of this bar, but today I did not. Why? Because it is into a support area which is yesterday's high, and you can see that it ticked here and closed above it. So possibly there are buyers below that would provide support, and I don't want to get into something that I know is not going to work that high probability, right? That is the analysis that you have to do for every single trade, whether the breakout that you expect to happen is really that high probability or not, right? Now you could go for low probability trades, but then you have to go for larger reward. I have explained the math of probability versus the risk reward calculations in another video. Okay, so what happened next is basically I skipped this short. Then you can see that in sidebar, which is having tails on both the sides, so there is nothing that is happening here. There's an indecision in between bulls and bears, but bar closed bearish. Then this bar poked above. The moment I see an inside bar, bar 2, I anticipate a setup which is basically I'm looking at a trap setup. If the bar 3 goes above bar two's high and then comes down all the way below bar two's low, I'm basically taking that short. Okay, that's a trap trade. Okay, immediately the moment I see bar 2 as an inside bar, this is the setup that I anticipate. But here I know I skipped this short because it's into support zone. So that's why I was not going to place this short trade, right? Because I know this is a strong support zone wherein it is going to possibly fail. So I skipped this even though this bar 3 poked above bar 2's high and closed nicely at its low. I did not place a short order below bar 2 low. So you can see that it would have triggered had I placed the short below bar 2 low, okay, but I did not. And you can see in bar 5 immediately why it was a good decision, because you could see that the bulls immediately bought the low of bar 4. They did not allow any further damage. They did not allow the price to go below bar 1's low, so that support was provided, and the bar closed really strong at its high. Had I placed this short, which is basically low is 460, I would have gotten an entry on this bar, and this high is 470. I would have been stopped out on this bar immediately, right? We avoided a bad trade just because of some simple pointers that I just mentioned, right? You need to see what is the room that you have for any trade to work out, whether it is really that high probability trade or not. Okay, so you avoided a bad trade. Now this is a strong bull bar at yesterday's high. Is this a breakout pullback? Possibly in other situations it could have been, but here it is not. Why? Because again you can see that there is a lot of overlap that is going on here. This bar is a doji bar, trading range bar, failed above this bar's high, failed, below this bar's low. What is going on here? It's a trading range price action behavior that is being exhibited. I don't want to get involved into a trading range like this. I would have placed a long order possibly if it had gone below this bar's low and failed. Possibly. Okay, there will be some other factors that will come into picture, but that is not the case here. All this is happening inside this bar's range, and then within that there's a trading range behavior that is being exhibited, right? So for some who placed long about this, which is high is 470, the long triggered in this bar and it went all the way up to 492. So somebody got 20 points. So it was not that bad trade, but it's a hindsight analysis. It went 20 points. It could have stopped here as well because you knew that there's a resistance around this area and possibly a failure point. Okay, so those who were aggressive got those 20 points and maybe possibly got out immediately, and that's why you see no continuation and there's a strong bear bar, right? So you see this bar and a possible opportunity to go short, right? Which is this is a clear trading range behavior that is exhibited. Now you are getting into a trading range price action. So you possibly took this aggressive long opportunity. That's something that I skipped, as I mentioned. Again, someone who's aggressive, there is a short opportunity here as well. Okay, but this is again a support area where it is possibly going to halt. So that's why I skipped this one as well. But somebody who went short here, which is below 470, 17,470 is the low here. Okay, they could have made 30 points if they uh, got in, right? I did not. I skipped this one as well. Okay, so it depends on your comfort zone and what trades you want to get in. Okay, I just don't want to be click happy or trigger happy person who's just placing trades left, right, and that is not what I do. Okay, so this worked. Somebody took the shot. That's great. This was a support here at EMA. Possibly after this breakout, you can see that this went one more time and it came back. So this is now turning out to be a breakout pullback possibility because you can see that immediately bullish bar was established, and that's a failure again one more time. So as I mentioned, this trading area trading range zone is still active, right? Price is failing at both the ends, right? At this level and this level, right? So possibly this is a trading range day, okay, because the price is at least trying to get past this bar one's low and failing. Okay, within that also a trading range was established. So looking at this failure, I was about to place the long order and I had placed the long order about this, which is 17,468, or you could keep some room. But immediately I saw a bear bar, and there's no sense of urgency by the bulls. What is going on, right? This bar closed below yesterday's high, and it was a bearish close. So I immediately canceled the long order because I don't see any sense of urgency. Possibly there is one more leg down. But What happened next is bulls bought below this bar's low. So those who were providing support on this bar were providing support on this bar as well. Aha, so bulls are strong. They're not letting it uh, go. And you can see that there's a tail on this bar. So bulls bought and then they kept on pushing the prices up. Immediately I then placed, this is basically a trap setup. All those who went short below this bar, assuming that bulls are not winning here and there will be a good opportunity to go short, are trapped. And trap is one of my favorite setups. So I placed the long order again one more time about this high, which is 17,468, right? I usually give a room of at least 0.25. One tick is basically 0.05. So it will be some ticks just to make sure I get placed into a breakout and not just a tick here or there, right? So entry triggered on this bar, right? 468 point something, uh, right? Then it's stalled here. You can see that this is a trend line coming from bar 1 this high, say, so a possible resistance. Okay, this went till 485, so around 17 points is what you got from this move. We haven't booked it yet. Okay, risk is 10 points from the entry, right? Profit target is at least 13 points. So we have that much room till bar 1's high, which is a possible resistance. Bears tried to fail the breakout that we received about this bar. Okay, but immediately bulls provided the support by, you can see the tail, which means bulls did not allow bears to take control. Possibly it was a breakout test about this bar's high, right? Which is a good sign because immediately next what you see, bulls bought the close of this bar. They did not allow any more uh, down move at all. That's a strength that bulls are exhibiting, and it broke out of this trend line. Good. So bulls are showing a good sign, right? It went all the way up to 17,494.95. So your profit target of 30 points just missed by a few points. Hold your patience. Okay, do not take any decisions out of emotion. Okay, this price is showing all the signs that it is strong. Bulls are strong. Even though you did not get the target hit, that's fine. Wait with all your orders placed in terms of the stop loss and targets and let the market do what it wants to do. Okay, you follow your rules. Be patient. Now what do you see? Bears tried one more time. They pushed the prices, they sold the closer bar, this bar, and started pushing the prices down, all the way down below this bar. What do you see again one more time? Bulls did not allow this bearish pressure to remain as is. They immediately bought below this bar's low and pushed the prices up. This is a clear bullish strength clue that we are getting from this price action. And this is what the price action analysis is all about. Reading who is winning at this point of time, who has the upper hand, right? Then you can see that on this bar, they immediately bought the close of this bar. So bulls are really strong. And then you got this breakout about bar once high and you got your 30 points target as well. You got in at around 468 or maybe 468.1 to whatever it is, and then you got your 30 points profit at around 498 point something, right? Depends on the way I explained it, right? So it is that simple to basically uh, analyze the price action, the way bar by bar clues are being dropped, and then how you can trade uh, using that analysis. That's it. I hope it helped. Thanks for watching.